I think our market's way overreacted to what's going on in China. First of all, the market had gone up a lot. It's still much higher than it was.
But isn't
when
it
the rally
indicative
started.
of the underlying Chinese economy?
It's the uncertainty that is the problem. It's the question.
We don't know whether it's indicative.
We don't know whether it is. We don't know what the growth rate of China is going to be over the next couple of quarters or a couple of years. American companies directly don't depend that much on the China market per se. If you look at the portion of their overall revenues in China, it's not huge. For some companies, though, it is. The problem in part is that China has a big impact on other countries in East Asia, and it has a big impact on commodity producers. So China's become sort of the marginal buyer of a lot of commodities. It's the most important market for virtually every country in Asia. So it does have a very broad regional and sectoral impact in commodities. So people are looking at it. I think they over-exaggerated the impact of the currency devaluation. It wasn't really much, certainly not as much as the devaluation of the euro vis-a-vis the dollar, but it's the uncertainty, and we don't know as much about where the Chinese economy is going quantitatively. We have an idea what the policies are, but not how quickly they're going to impact and produce a higher rate of growth.
But the implication there is that China is the growth engine. I don't think that's the case. The reason China has slowed, being an export-oriented country, is that the world has slowed. Mm-hmm. Until they have their domestic economy more dominant, they're simply reacting to the worldwide economy. And it is, everyone says China is slowing. No, the world's economy is slowing because it's export-oriented.
It's just a gauge of what's happening.
It's a little of both. It's slowing somewhat, and the world's slowing, and the two are sort of impacting negatively on China. It's not. We can't depend on China as the growth engine to solve all of our problems.
No, but Dick, that makes a lot of sense. It's not something I've ever heard somebody posit before, and it makes you realize that that's probably why the market is reacting as much as it is. It's not that we're worried about the impact from what China may or may not do in terms of trade with us. We're worried about what this is as an indicator for the rest of the globe.
And the reason the U.S. economy is doing so well is it's the opposite. We're not that dependent on exports. It's an economy that can grow without having a worldwide economy, booming. China can't, or can't to the same degree by a huge factor until they get their domestic economy.
That's exactly right. That's why they want to reduce their dependence on exports. Exactly. They want to have more dependence on their own domestic demand, not be as vulnerable to exports.
Hank Paulson has been telling them that for 20 years.
Right, that's true. but they have been very dependent on the global markets because they've been doing so well in global markets. Now they have to make these internal adjustments.